Welcome to Keep Hustling, where we are going past the why to get to the how. I'm your host, the always hustling Aaron Gordon, aka NY Risk Advisor, aka Mr. Keep Hustling. In this podcast, we will be diving deep into the professional and personal successes of our guests to find out how they hustled through the most difficult times in their life and their development to achieve the success they've gotten to today. So buckle up for what hopes to be an amazing ride. Let's get to it. Welcome to Keep Hustling with my guest, Jay Connor. Jay, thank you so much for being here today.
Aaron, thank you so much for inviting me to come along and talk about my favorite topic, that being private money for real estate investing, how to get your deals funded without ever asking for money, how to get the money chasing you instead of you chasing the money. And yeah, private money, Aaron, has had more of an impact on our real estate investing business than any other strategy that we have employed.
Well, isn't that the ultimate hustle, getting money to chase you? But I just want to say my goal in the next half hour is to validate or figure out if that accent is fake or not. I'm just kidding. So I want to take a step back, and we're going to get into private money because I do want to talk about private money and misconceptions about banks and how things work in the U.S. But I assume that there had to be a moment where you had a realization about the money game, the finance game, the traditional finance game. What should be traditional, the right way to do it, the wrong way to do it, and not the wrong way to do it in any sort of bad way, like illegal way, but the wrong way where you realize that maybe the way everyone else was doing it was not the best, easiest, and least complicated way for you, your family, and your future. So can you take us back to just where things started or where the hunch came from and those moments of putting things together?
Well, I remember that moment, and it was really only about less than 60 seconds that I had a realization that I was going about this business the wrong way. Carol Joy, my wife, and I, we started investing in single-family houses here in Eastern North Carolina all the way back in 2003, full-time. And Aaron, the first 6 years from 2003 until January of 2009, the first 6 years of being in this business, as far as getting our deals funded, the only thing that I knew to do was go to the local bank. I had a line of credit, and they made the rules. They set the interest rate. They set the terms, of course, all that. And that worked out okay, if you will, for those first 6 years until January 2009. And this is the moment where everything changed. In fact, it's because of this moment that I am on your podcast. And so I called up my banker, as I had many, many, many times. His name was Steve. I called up my banker. I had 2 houses under contract to purchase. And Aaron, I thought I still had a line of credit at the bank that I had been using for 6 years prior to making this phone call. So I called him up. I told him about these 2 deals, the funding required for the deals. And I learned like that over the phone that my line of credit had been closed with no notice to me. And when Steve told me that, I said to him, I said, Steve, what in the world are you telling me? My line of credit's been closed. We've had a great business relationship, always made my payments on time. Why has the bank closed my line of credit? And Steve said, Jay, don't you know there's a global financial crisis going on right now here in 2009? And I said, no, but you just gave me a financial crisis. I don't have a way to fund these 2 houses, these 2 deals. So I hung up the phone, and I knew I was going about this business the wrong way. I had all my eggs in one basket. I only had one funding source. And so I sat right here at my desk for a moment, and I asked myself a very powerful question. And the power is in asking the right questions. I can't have the right answers unless I got the right questions. And the question I asked myself, Aaron, was, Jay, who do you know that can help fix your problem? And by the way, all these people running around saying every problem's an opportunity. I want to throw up. I didn't have an opportunity. I had a problem, right? Didn't have a way to fund my deal.
You had 2 deposits out there.
Now, admittedly, the problem became an opportunity over time. That's why we're here today together. But so here's the question I asked myself. I said, Jay, who, not how. I said, who do you know that can help fix your problem? And, interestingly enough, when I asked myself that question, I immediately thought of Jeff Blankenship, a dear friend. He was living in Greensboro, North Carolina at the time, and he was investing in single family houses. So I called him up. I told him what had happened, hoping he could tell me how to fix my problem. So I told Jeff my problem, and Jeff said, "Welcome to the club, Jay." And I said, "Well, I'm not sure I want to be a member of that club, but what club are you talking about?" He said, "Well, that's the club of having the banks close down your line of credit." He said, "The banks shut me down last week." I said, "Well, Jeff, how are you going to fund your real estate deals?" He said, "Well, have you ever heard of private money?" I said, "No." He says, "Have you ever heard of self directed IRA companies to where ordinary people can move their retirement funds over to a self directed IRA company, loan us the money on the real estate deals, and the interest that we pay them is either tax deferred or tax free for them?" I said, "Jeff, you're talking Greek to me. I don't know what in the world
I'm
you're."
just the guy who calls the bank every time they write a check.
Yeah, I'm going, "I don't know what you're talking about." I said, "What's private money?" He said, "Well, I'm not really sure." He said, "But there's this gentleman down in Jacksonville, Florida, by the name of Ron LeGrand, and he says he can teach us how to get private money." I said, "Well, what is it?" He says, "Well, I don't know, but Ron LeGrand says we can get a lot of it really, really fast." So Jeff and I went to that conference to learn about private money. And Aaron, oh my lands, did I learn about private money. The biggest thing I had to get my head wrapped around is that there's no chasing, no begging, no selling, no asking. It's all about taking on the mindset of being a teacher. So my hat says private money teacher. So I had to view myself as an educator to ordinary people, not looking for rich people, just ordinary people who have got what I call lazy money. That's money they've got either investment capital and or retirement funds. It's lazy. It's not working for them. It's not getting them a high rate of return safely and securely. So I came back home from that conference and I put my opportunity together, Aaron, to where I was going to teach people in my own network, my own social network, professional circle, service circle, my connections, and share this opportunity that I had of how they could become a private lender and earn high rates of return safely and securely. So Carol Joy, my wife, and I, we've had 47 private lenders. And you know what's interesting? Not one of them ever heard of private money, private lending, until I shared the opportunity with them. They'd never heard of self directed IRAs. And by doing that, I was able to raise $2,150,000 in less than 90 days of starting to offer the opportunity. And Aaron, ever since that time in 2009, I've never missed out on a deal for not having the money.
I'll tell you what I think is amazing about the concept or about your story. Then I want to dig a little deeper is you went to the money that everybody said they didn't have in 2008, 2009 in a financial crisis. Some might say the time to go for private money is when life is great and money is abundant, because then you could say, hey, I could get it at X% from a bank, but if I can control the deal and I can help my friends and family and everyone has money just flowing and the economy is great. What's inspiring to me about your story is that you took the pivot to an unlikely source in a financial crisis. Most people would run the other way. Most people would say there has to be a bank, and the bank, because the whole world is collapsing financially, that's the time to double down on standard, boring, traditional modeling. Do you understand what I'm saying? Yet for you, that light bulb moment led you to the non-traditional route in the crisis, which then I'm assuming you're going to say paid off 10 times when there wasn't a financial crisis.
Oh, absolutely. Because of the bank closing my line of credit and then me putting the opportunity together and offering it to people that had never heard of this world. Aaron, our business tripled in 2009. And here's why. Recall back in 2009, you had all these foreclosures. You had a ton of foreclosures going on because people should not have ever been loaned that money, a mortgage. And the banks weren't loaning money. So if you're going to buy a foreclosure, then you had to have all the money because the bank wasn't loaning money. So now I've got all this private money that I was able to attract. And therefore, private money's like cash. You're making like a cash offer. In fact, I closed on one this morning. This morning, I closed. And when the banks aren't loaning money and you got money and you had all these foreclosures going on, it's like the vortex.
You're the only buyer. You're the only buyer.
Yeah.
But it's amazing to me that literally, like, what's incredible about the journey or success, and it doesn't always work this way. And I'm not, God forbid, saying that everyone doesn't deserve success, but that vortex was created by someone's failure to pay their bill, right? So on one side, you have people who made an investment that they shouldn't have with their cash, for lack of a better term, in a piece of real estate that they couldn't support. And now the bank that was supposed to be the traditional safe place wasn't. And comes this guy whose name is Jay, who at the time knows nothing. Now you're an expert, but then you and I are agreeing. I hope. You said you went to one seminar. You said you knew nothing about how this the ins and outs at an expert level, yet you were able to solve the problem of a bank being just a guy and his wife, no disrespect, from North Carolina, and now it's changed the whole trajectory. And the most ironic thing is, who lost out the most? The bank. No, I'm not crying over the bank, but it's what I love about getting to talk to business owners and entrepreneurs and people who hustle their way to success is that there's so many ways to skin that cat.
Yes.
And you created that vortex, and it has so many diametrically opposed forces that somehow it just comes in line. And it's fascinating to me.
Yes. Yes. So we were so blessed to hear, shoot, I'm drawing a blank on his name. Mac. What's Max's last name? Very, very popular author. I'm drawing a blank. Anyway, he's a very popular business author, leadership author. Anyway, we heard him speak last year. And to your point of entrepreneurs that think outside the box creatively, reminded me of his quote. And his quote was, problems not all problems have a solution. He said, every problem has got multiple solutions. Multiple solutions. There's just not one solution to a problem. There's multiple solutions. And so having that kind of thinking, right? That kind of abundance thinking is just what, keeps pushing you forward. That also reminds me of the mindset. Do you have a mindset of a victim or a victor? Jack Canfield is one of my most inspiring authors and speakers. Carol Joy have gotten to meet him. We've been able to meet him more than once in person. And in fact, he told me, he said, Jay, if you ever get tired of that real estate thing, you need to come over here with me on this personal development thing. But he's got a very popular book. Well, he's the co-author and originator of the Chicken Soup for the Soul series, all the way back in the 1980s. He and Mark Victor Hansen. But his popular book, which is titled The Success Principles, in fact, it's just been republished and updated. It's got 65 success principles, no matter what business or, what topic or area you're in. And his very first success principle is the foundation of all the other success principles. And the number one principle is take 100% responsibility for everything that happens in your life. Own it. Own it. Whether you attracted it or you didn't. And he gives a formula in that first chapter that's so powerful that reminds you that you are the victor and not a victim. And that formula is E plus R equals O. And what that formula stands for is the event that happened in your life plus your response to that event that happened in your life equals your outcome, what you're experiencing. A lot of people are walking around with a different kind of formula. A lot of people are walking around with a formula called E equals O. They think that whatever happened to them in their life, that event, that determines what they're experiencing, their outcome. But once people realize you have 100% choice and control as to how you want to respond to whatever it is that happened to you, that determines the outcome. Well, that plays into
That's
my story, right?
that's what keep hustling is.
Yeah.
It's saying that no matter what the event is, there's always two roads. One may seem easier, one may seem more obvious, one may seem clearer. But what was that poem that we learned in day school? Two roads diverge in a yellow word, but I took the road less traveled by, and that's made all the difference. I think that was a Miss Ginsburg fifth grade, but I could be wrong.
Oh, well, that reminds me of the book titled The Road Less Traveled.
But my father, he should rest in peace, used to say in the insurance business that if when you step out of the box with logic, not just flying without jumping out of an airplane without a parachute, when you put your mind to it and you put together a structure, the people who are the most successful, the people that step out of that box a little bit. Some people a little bit more, some people a little bit less. I have to ask you, do you believe private money investing is for everyone, or do you believe that there are people that shouldn't even attempt to get into it?
That's a great question. Aaron, I've been a guest on over 800 podcasts talking about private money, and you're the first host that has asked me, is private money for everybody? I'm so glad you asked me. I know the answer.
I take
Private
pride in that, so thank you.
private money is not for everybody. And I'll share the first reason that comes to mind. If you are a real estate investor and you don't know how to manage deals, if you don't know how to protect the private lender's money because they are trusting you to protect their money. We don't borrow unsecured money. It's all collateralized with the real estate that we are investing in. But there's a 5-letter word in this arena that begins with a T, and that's called trust. I mean, even though the private lenders, these ordinary people that you've shared this opportunity with, even though, they're getting a mortgage or a deed of trust and we're naming them on the insurance policies of mortgagee and et cetera, and all these, we don't borrow more than 75% of the after repaired value. I didn't say of the purchase price. We always bring home a big check when we're using private money. I mean, who wants to get paid to buy real estate? But everybody's protected. But if you don't know how to protect that private lender's money and you don't know how to manage the real estate investing deals yet, then you should not be borrowing private money yet until you know how to do that.
Do you ever think about what would have happened if the bank didn't turn off the faucet?
Oh, wow. I have thought about that. And, I got into this arena out of necessity. And I had no idea how quickly this world of private money could scale your business. I had a limit. I had a limit to my line of credit at the bank. I missed out on deals because my credit limit was maxed out, prior to this world of private money. Then I learned about private money. Like, there's no limit to the amount of private money you can use. There's no limit to the number of private lenders you can have. There's no limit to the amount of private money that you can be using. And back to what I said at the very beginning, that mindset shift. Most people walking around think that whoever's got the money or the gold makes the rules. That's traditional thinking, right? But the way I do it in this arena is I make the rules. And I have thousands of students across the nation that now are using private money the way I do. Instead of asking for a loan or asking for money, we're offering an opportunity. I've been paying my private lenders 8% annual percentage rate every year since 2009. They love it. Compare that 8% to what you can get in the local bank, for goodness sakes.
So that's the pitch. My next question was going to be, what's the pitch to because even the people who are not going to be private money investors can be private money investees, right?
Oh, sure.
Can invest.
Well, what they love, what these private lenders, these ordinary people love about it is it's totally passive. They don't have to negotiate deals. They don't have to find deals. They don't have to oversee deals. It's just like them putting money in the local bank, but instead of earning 0.02% in a savings account or less than 3% in a certificate of deposit, which you can only get now for 4 months, they're getting 8%. So totally passive.
What happens if you fail?
Well, what's the definition of fail? So, for example, do my rehab and renovation projects come in on budget? No, they never come in on budget. They're usually over budget. I actually had one come in this week that we finished under budget $2,000, which was very, very out of the ordinary. So does that mean if my renovations come in over budget, I failed? No, that doesn't mean I failed, because the safety net or the safety curtain is not in estimating repairs and renovations perfectly. It's in your offer. Your safety net is, did you buy the property at a deep enough discount? So what's the definition of failure? David Meltzer, brilliant guy.
He was on this podcast.
Yeah, I was on his podcast. He was on my podcast. David Meltzer, he's great. And one of his quotes is, I don't believe in failures. I believe in lessons.
Amen.
Right? That's what David says about failure. Now, there's a very, very popular book by the same author and speaker that I'm still drawing a blank on. But the name of one of his books, and he's written many books, the name of his book is Failing Forward. Failing Forward. And one question that was asked during his talk last year was, what is one attribute or characteristic you have that you think lends the most to your success? His answer was, well, I just fail more often than everybody else. And so he had to explain himself. And his explanation was, he says, everybody else might be trying 7 things and I might get only, 1 or 2 of them right. He says, I'm trying 70 new things instead of 7 new things. He says, I can still fail at accomplishing or getting off the ground one of those new ideas. But he says, I just fail more than anybody else by trying more things and therefore has many more successes.
John Maxwell.
Thank you. I had the Max.
I looked it up. John Maxwell.
Thank you, John Maxwell.
My father, his recipes used to say, you throw enough things at the ceiling, one of them is going to stick.
Right.
And that's one of the things that motivated me to start this podcast, or to live the Keep Hustling moment, the mindset, the lifestyle, understanding that resilience pays and that dreams in action never quit. That if you just keep hustling on your definition and you keep throwing things at the ceiling and you keep trying 70, the best baseball players out there fail 7 out of 10 times at the plate, right? More than 7 out of 10. So there's a certain resilience that has to be in place, that you have to be willing to try things. And I think that the most important part of that is, which brings your story full circle, you have to be open to the idea that there is another way. Meaning, that doesn't mean that the way of the bank when it was working was wrong and that you wouldn't have made money and that life wouldn't have been okay. But when the rubber hit the road and that wasn't an option, if you were closed-minded to even the idea that there was another road, another path, maybe more difficult, maybe more complicated, maybe requiring a change in mindset, you kept hustling through that and kept trying and trying and trying. And the scary thing or the crazy thing about the person who's willing to try 70 new things versus the one that's willing to try 7 is that the guy who's willing to try 7 and fail twice, he only has 5 failures. But that guy who's willing to try 70 is crazy enough to realize that he's going to have 60.
That's right.
65.
That's right. So true.
From the beginning, you know that if you try 70, you're going to fail more than the guy who tries 7. That's statistics.
Oh, sure.
And so many people run in fear from that. And what we're trying to do here, and listening to your story, I'm more inspired than I've been in a long time doing this. It's taking a route that may not be traditional now and making it the traditional in the future by hustling through that. So thank you for coming on to share with us.
Absolutely, Aaron. This has been fantastic.
What's the biggest misconception we missed so far about what you do?
The biggest misconception. Well, I alluded to it. I want to reemphasize it. And that is the biggest misconception that real estate investors have is that they've been taught, they've been misled, they've been taught to go get a property or go get a deal under contract, and then the money will show up. The gurus say stuff like, oh, money finds good deals. Or they'll say, oh, get the deal under contract, the money will show up. That is a huge misconception. I practice, I preach, I teach, I coach, get the money lined up. There's always going to be deals. There's always going to be deals. But once you've got the money lined up with no deal attached to it, I mean, the worst time to be raising private money is when you need it for a deal. Think about how many more offers.
Then you don't have the control. Like you said, it's all about the control. Now you don't have the control. You're desperate. You have 3 days to close to make sure you got the money.
Exactly. I mean, think about how many more offers, how much more confident, how much more clarity you're going to have as a real estate investor when you've got the money lined up and you have a deal come across your desk. And now you can confidently put it under contract, call up one of your private lenders and give them what I call the scripting. I call it the good news phone call. I call up my next private lender to send a queue. I say, I got great news. I can now put your money to work. I promised them I would. And I tell them where the property is located, the township, the after repaired value, the funding required, and when the closing is, and when they need to have their money wired for the closing to my real estate attorney's trust account. And I tell them the real estate attorney is going to email them the wiring instructions. That's the end of the conversation. They've been waiting for the phone call.
And by the way, you can close the deal much better and much quicker because you know that you have the money, and therefore the seller is you can close you can close tomorrow.
Absolutely.
If you have the money lined up.
I make all my offers. I can close in 7 days.
I love that. Jay, this is fascinating. I never even thought about it. So I appreciate you reaching out, having your team reach out, and coming on here and sharing your knowledge. As you know, we have a closing tradition on this podcast, so we ask our guests to leave us with their favorite motivational or inspirational quote and what it means to them and to their hustle. So with that, I will say thank you, Jay Conner, for joining us, and the floor is yours.
You got it, Aaron. Well, here's the one that I've gotten feedback the most from my followers, my students, my members of my mastermind community. And the quote is, successes are scheduled. Successes don't happen by accident, right? Successes are scheduled. So that's why I endorse, make sure you're using your calendar to get everything in your life scheduled, because unless it's on the calendar, it may not be happening. Successes are scheduled.
I love that. If you hustle long enough, you keep hustling, the successes will be scheduled all throughout your day. So thank you. This has been another episode of Keep Hustling. Remember, do well by doing good. And of course, and always, keep hustling. All right, hustlers, that brings us to the end of another fantastic episode. Thank you for listening. The listeners are the most important part of this show. If you like what you heard, please leave us a review wherever you listen to your favorite podcasts. Your feedback means the world to us and helps us reach more listeners. Plus, be sure to subscribe to our podcast so you never miss an episode. We have some amazing guests and topics lined up for you, and we don't want you to miss out. And finally, if you have any suggestions, comments, or even just want to say hello, please feel free to reach out to us on all social media platforms. We are Keep Hustling Pod on Instagram, X, Facebook, and LinkedIn. We would love to hear from you to continue the conversation. Thanks again for tuning in and supporting our podcast. We truly appreciate each and every one of you. Until next time, stay curious, stay hungry, and keep hustling.